Hello friends, in this video we're going to talk about the key recommendations which has been made by the 54th GST Council meeting held on 9th September 2024. The first and foremost amendment is with regard to the proposal for insertion of rules in respect of section 128A. So we all know in the Finance Act 2024 a proposal for amnesty scheme is there for 1718 to 1920 for waiver of interest and penalty if the tax demand has been paid for the relevant financial year. Now, there are quite a lot of confusions in terms of what procedure to follow, what are the conditions for which the availment would be there. So whether if we have made the payment of tax before and the demand is only for interest and penalty, whether for those issues with the 128A waiver would be applicable or not. So for that they are proposing to insert rule 164 in the CGST rules for giving this understanding. Also, the date which is to be prescribed would be 31st March 2025. So if I'm making the payment of the relevant tax amount before 31st March 2025, in that case it would be applicable. Also, for various situations where in such certain cases tax has been paid, interest penalty is not paid, where the appeal has been filed, in some cases appeal has not yet been filed and the time limit has gone, whether for all such cases whether this would be applicable. For all of this a circular would be issued by the government, and obviously how to do it, the procedure would be done through the rules itself. And it is also proposed that this provision would be notified with effect from 1st November 2024. So any demand which is pending for the earlier period, one should buck up and make sure that between this period of 1st November 2024 to 31st March 2025, they can avail the benefit of this scheme if they feel relevant, if it is making more sense for them to pay off and finish off the cases. In such cases, again, we have to wait for 1st November 2024 from which it is expected to be notified. Now also 16.5 and 16.6 are the two new provisions which are proposed to be inserted. Again, it was proposed through a Finance Act 2024. It would be notified at the earliest with retrospective effect. So any demand which is for 16.4, where I have availed the ITC for 1718 to 2021 within 30th November 21. In such cases, it is expected that those amount would be considered and would be allowed by the department. If the appeal has already been filed, in such cases, the appeal would be in favor of the assessee based on the if it is taken as per the 16.5 timelines. 16.6 is where my registration was cancelled and I have applied for revocation of cancellation of registration, and the returns have been filed within 30 days of the application for revocation of cancellation of registration. In such cases, 16.6 allows me to take the ITC. For all the cases where one has not filed an appeal and the ITC has been not allowed by the department as per the earlier 16.4 provision. Now, given that this retrospective amendment has come in and this would be allowed, there is a special procedure which is necessary for the assessees who are not yet litigating. So for them also this benefit would be available because the department would have created a demand for which the assessee might have accepted it. In certain cases, what would be the procedure for rectification of such orders would also be prescribed. Next, B2C E-invoicing. So after B2B E-invoicing, it is also recommended that B2C also would be having E-invoicing implemented throughout the country, but it would be implemented on a pilot basis in the beginning, and it would be run in certain states and in certain sectors to ensure that the pilot project of it is successful. Once it is successful, then retail customers also would be able to verify the invoice based on B2C E-invoicing. So again, this is something which is a challenge for retail segments, given that they would be selling the products off the shelf. For them also, they need to make sure that they are ready with the implementation of E-invoicing after a point of time. So eventually it would be implemented. Also, a new invoice management system is proposed to be implemented from 1st October 2024. Now, for invoice management system, it is similar to the GSTR 1, 2A, 2, 1A, 3, which was earlier prescribed as the form, wherein the supplier would upload the invoice, the recipient would accept those invoices, and thereafter, once the recipient accepts those invoices, it thereafter runs automatically into his GSTR 3B. So similar to this, invoice management system is proposed to be implemented, where for every invoice, the taxpayer has an option. Mind you, this is an optional facility, where for every invoice uploaded by the supplier, they can either accept, reject, or keep the invoice pending. If they accept the invoice, it automatically goes to 2B. If they do it before 14th of the relevant month, if they reject it, it does not even enter the 2B of the relevant recipient. If they keep it pending, it goes to the next month's 2B automatically. And if, let's say, that relevant taxpayer does not take any action, obviously it would be going automatically to the 2B. It is deemed to be accepted. But if any action is taken after 14th, it would be taken in 3B, but 2B would be auto-generated. So 2B does not get changed. Only thing in the 3B, again, there would be a line-wise details. So as per the department, as per the government, if anyone is availing this facility and they are marking every invoice on the portal, then in that case, government has details of all the invoices for which ITC has been taken. So this results in less litigation according to them. So we'll have to see how the system pans out, how many people are actually implementing the system, given that they are already used to the current system of availing ITC and thereafter reversing ITC through the 2B and 3B mechanism, rather than taking every invoice for the purpose of acceptance and rejection. Also, a few ledgers are proposed to be added. For RCM, for instance, if I am having any kind of RCM payment made but ITC is yet to be availed, so the balance would be showing on the portal that RCM liability is paid but yet to be availed, or if the balance is negative, that means I have availed more RCM ITC than the amount that I have paid. ITC reclaim ledger is also proposed to be inserted. For all these ledgers, the opening balance would be entered by the taxpayers by 31st October. So any ITC which is to be reclaimed also would be disclosed here. All of these ledgers are newly to be inserted. Also, a very big amendment with regard to people in the metals industry. So a lot of them are buying scrap from unregistered persons. Most of these unregistered persons are extremely unorganized. As a result of it, it is not possible for them to even pay taxes to the government, as a result of which a lot of registered persons are suffering. Certain cases, the supplier is also registered, but they are not paying taxes to the government, so the recipient is being denied the ITC. To circumvent all of this, what they are proposing is, if the supplier is unregistered and he is supplying metal scrap, in that case it is the recipient who would be paying taxes under RCM. And if the supplier is having the threshold beyond the limit, so 20 lakhs or 40 lakhs as the case may be, if the supplier has turnover beyond the threshold limit, then they are required to take registration. But even in such cases of B2B supplies, recipient who is buying scrap from these suppliers would be deducting TDS, so that government is able to tap these suppliers in the first instance itself. For the first time, TDS has been introduced in a situation where government is not involved. So only on government contracts it was earlier there. So this is proposed to be newly inserted for even metal scrap dealers for the future. Also, one more area of litigation has been PLC charges. So preferential location charges. For instance, I am wanting to buy a flat in a complex which is swimming pool facing or garden facing, or which is south facing flat. So all of these flat command a premium value, for which the developer might be charging preferential location charges separately over and above the construction services which he is charging. So normally, as per understanding, these PLC charges should be considered as part of the construction services, because the main service is the construction services. PLC charges are nothing but ancillary to the main services. So in such cases, it has been clarified to put to rest a lot of disputes, that PLC would now be considered as a naturally bundled supply, and PLC would be attracting the same rate of tax as that of the original construction services. And obviously this would put to rest a lot of disputes, but we'll also have to see a lot of cases where the supplier has taken ITC and has charged higher rate of GST at the rate of 18%, what happens to them? Because ultimately this clarification comes in. Ultimately, it would affect everyone right from the beginning. So a few people who have charged higher rate of GST and also taken ITC, what happens to them is something that needs to be seen. Also, commercial property. So we know residential property given by a person to a registered person would be under RCM. Now, even for commercial property, if it is given by unregistered person to a registered person, it would be under RCM. It seems as if it is given by a registered person, it would not be under RCM. But if the supplier is unregistered, in such cases, to ensure there is no revenue leakage, RCM would be applicable on such supplies. Also, a clarification with regard to GTA services. Now, GTA, along with provision of transportation services, also provides ancillary services in the form of loading, unloading, transshipment, temporary warehousing, packing, unpacking. So normally the main supply is that of GTA. All these supply would be considered as ancillary to the main supply, and it would attract the same rate of GST as that of the original transportation services. Having said this, if this is not considered as ancillary, but it is considered as a separate supply in itself, it is not considered to be with the transportation supplies. In that case, it would be not considered as composite supply and would be considered as independent supply in its own right, and applicable GST as per the relevant HSN code for that supply would be applicable. So whether it is supplied with transportation charges or without, or separate from the transportation charges, changes the whole dynamics of the taxation here. Next, with regard to 9610, so persons who are importing as EOU or under advance authorization or under any scheme which is resulting in them getting duty concession on their imports, those persons are as of now required to also export without payment of tax. So when they are importing without payment, they have to export without payment. A lot of these SSCs, though they have imported without payment, they have done export with payment. For that, they have got a lot of notices from the department to make sure that those notices are complied with. They have paid the taxes on the import. On the bill of entry, they have paid the taxes along with applicable interest and also taken the ITC on that. Now, still the department is saying that 9610 is not complied with because originally you had not paid the taxes on the imports. To make sure that this gets complied, this is going to be clarified that once I have discharged my liability on my import, assuming I have exported with payment of tax in compliance of 9610, in such cases, there would be no non-compliance on my end. So if I have imported without payment and exported with payment, later on I have complied with the law by paying the taxes on the imports, that means 9610 would be deemed to be complied with. Also, this has caused more confusion, and a lot of people are now moving out of this particular scheme of EOU and advance authorization because of the complexities involved in these transactions and the restrictions. So what they are now proposing is they would be omitting 9610 and special refund provisions under 89(4)(a) and 4(b) for deemed export, for advance authorization, for EPCG scheme, for all of these cases, for EOU cases. Separate schemes are prescribed for refunds, which even the department is not aware of it properly. So because of this, they are now wanting to remove all of these schemes. For the future, it would be under the normal scheme. It is expected that 9610 would no longer be there. With this, I come to the end of my session, and I would like to thank everyone for giving me a very patient hearing, and I would see you in another video. If you like this video, please share and subscribe. Thank you so much.